This is Alan Bush with the Daily Financial Forecast for Thursday, March 29th. Starting out with the stock index futures, we are seeing higher prices today, even though we did have 2 out of the 3 economic reports coming in a bit on the weak side. One bullish report, though, was the jobless claims coming in at the lowest level since 1973. Obviously, we have this ongoing negative of trade tensions, but I think that ultimately it will be the still relatively low interest rate environment that supports this market. So even if we do see a new low for the move in the indices under this current congestion, especially in the S&P, I'm inclined to think that there will be very limited follow-through. And once again, it's the low interest rates that should dominate even over these trade tensions that may take a while to work themselves out, but there still seems to be support for the indices longer term, once again with the dominant influence being low interest rates. Moving over to the currency markets, the dollar index advancing yesterday with the GDP report coming in better than expected. A little weakness today in the dollar, higher prices in the euro currency with 2 economic reports in Germany coming in stronger than expected. Both the dollar index and the euro currency trading in a very broad trading range. Ultimately, I do believe the dollar index will break out to the downside and the euro currency will break out to the upside. Interest rate markets, even though the long-term trend still appears to be lower, I think I would stand aside for right now. But in the gold market, with a good breakout to the upside, a very clear breakout above trend lines last week, some of those gains given back this week. Inflation, though, is still coming back, still likely to accelerate. So any breaks in the gold market, I think, still should be used as buying opportunities. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.